Good evening, everyone. Good evening, all respected dignitaries, esteemed speakers, and valued participants. Today, myself, CA Manmeet Kaur Khanuja, moderator for today's session, on behalf of the Committee on Commercial Laws, Economic Advisory, and NPO Cooperative of ICI, extend a very warm welcome to all on day 5th of Knowledge Express Week. Over the past 5 days, the Knowledge Express Week has been an enriching journey of learning, discussions, professional insights covering diverse subjects like succession planning, arbitration, anti-money laundering, and FEMA. Today, as we conclude this series on the fifth day, our focus shifts to one of the most relevant areas for our professionals, Real Estate Regulation and Development Act, specifically RERA certificates and latest judgments. Our committee always empowers members by organizing high impact seminars and technical sessions on various diverse topics. I take this privilege on behalf of all the valued participants to welcome CA Mangesh Kinriji, our CCM of ICI. So I welcome you on behalf of all the members. CA Mangesh Kinriji is a highly respected CA with over 33 years of distinguished experience in fields of accounting, auditing, taxation, and corporate governance. This is his third term serving as the CCM of ICI, where he holds several key positions. He is the chairman of Professional Development Committee and Committee on Public and Government Financial Management. He also serves as the vice chairman of Central of Excellence Directorate. Sir, I request you on behalf of all to please address all the valued professionals.
Good evening, everyone. Uh, First of all, let me thank the committee and its chairperson, Abhay Chajed, and vice chairperson, for giving me this opportunity to interact with members. This committee has been doing very well in terms of different laws and making members aware about the niceties of different laws and develop their professions in this regard also. I know, and Abhayji has been doing. I have worked under him under a couple of years back under this committee as a vice chairman when Abhayji was chairman. And these kind of programs are really add up to the what you can say the knowledge base of the members, and they can develop themselves in these various fields of laws and add some more feathers in their cap of the practice. Today, we are going to deal upon the RERA audit and its new latest development with some cases. RERA being a central act, although it's being implemented in a different manner or rather by way of rules in different states. So some kind of rather most of the similar aspects are there, but there are certain other niceties also as far as different state what against the regulations are concerned. But still, the audit remains the same. In fact, very recent, we also required in disciplinary bench regarding the RERA requirement, RERA understanding, because there are a lot of matters which are coming up for before disciplinary committee also, of which I am a member, regarding the RERA aspects. So, as a chartered accountants in practice, we must be very clear. It's not kind of a audit which we undertake without knowing the nitty-gritties or rules and regulations and proper understanding of RERA law. So while doing this audit, number of provisions will have to be remembered. In fact, uh, I can say that more than true and fair view, it is an audit which actually demands true and correct view. And from that perspective, the expectations of the regulators are also from us that considering this the spirit of this law has been brought from the perspective of protecting the interest of the flat owners, at the same time the having a proper conducive atmosphere for the construction industry. So from the point of view of professional opportunity, there is definitely a great professional opportunity, but at the same time, the regulators are looking at us towards the trustees or the people who will have a proper, what you can say, control over the provisions of this law, and thereby actually implementation of the provisions in a letter and spirit. And they are looking at us as a catalyst, because although the appointments may be made by the developers and builders, however, we have to see the interest of the flat owners, and audit aspects have to be understood with that respect. We are dealing with many case laws also today that also will definitely throw some light on how the regulators are looking at it. And as I mentioned, not only in terms of regulators, number of cases are coming before the disciplinary benches also as regards the RERA audit non-compliances by the chartered accountants. Non-compliance in the sense that uh, we are, I mean, they feel that, of course, that we are not looking at certain aspects which we are required to do. And therefore, understanding this RERA audit in a right perspective and understanding the audit aspects will definitely
Okay, let's move ahead. Now, I would like to welcome our chief dignitary today, Shri Shiv Das Meena ji. He has joined us. Good evening, sir, on behalf of all the participants. Sir is the chairperson of the Tamil Nadu RERA Association and a
Hello.
retired.
I just missed.
Yes, sir.
I got disconnected. But thank you very much. Just to conclude, I mean, there's some network problem was there. So thank you very much. So I wish all the participants the best learning in this, and let us collectively take this opportunity in the right earnest. That's only appeal which I want to make from.
Thank you so much, sir. Good
You
evening,
can take
Meena,
it
sir.
forward, madam. Now.
Good evening, Meena, sir. I will request you to share some practical and valuable insights with all our profession.
Good evening. I'm Shivdas Meena, chairperson of Tamil Nadu Real Estate Regulatory Authority, and formerly I had worked as the different capacities, and lastly as chief secretary of the government of Tamil Nadu. So I have seen the real estate sector from very close quarters. Now as chairperson of the RERA, and earlier from administrative point of view. And incidentally, when the Tamil Nadu Real Estate Regulation and Development Act was implemented, I was there in the Ministry of Housing and Urban Affairs in the year starting from the year 2017 till 2020. I was there, and in the initial years of the implementation of this act, I was associated with the monitoring, the supervision of the implementation of this act, that how many regulatory authorities have been constituted, which are the states which have set up the say tribunals, and all kind of things, how many projects have been registered. So initially, the I mean, it was a challenge to implement this act. But when I see it, something like 7-8 years down the line, the RERA Act has been implemented in all nooks and corners of the country, and it has really transformed the real estate sector. When we see that how this RERA Act, what was the necessity of this legislation, we can see that the mainly it started with the lot of issues, especially in the Delhi NCR. Even today, many of those projects in Noida and Greater Noida, they are facing problems. And I have also seen closely, as briefly as CMD of NBCC, we were associated with the completion of some the delayed projects of Amrapali. Then briefly, we also tried to take over the JP Infratech through IBC. And I have seen what kind of problems these projects have faced. And when we see one main reason for delay in implementation of the projects is diversion of the funds or some financial mismanagement in one form or other form. And that being the case, the role of the chartered accountants is very important as far as the real estate sector is concerned. And in implementation of RERA, the specific responsibility is given to the chartered accountants. For example, every year, within 6 months, the accounts of the project has to be audited. And these audited accounts have to be published in a specified format and to be shared with the public by publishing on the portals of different RERAs. Every project, as I mentioned earlier, the finance is most important thing. That is why the Act mandates that 70% of the receivables from the allottees of project should go to a dedicated separate account. Normally, I mean, common parlance, we call it RERA account. So 70% of the amount has to be deposited in that, and that money has to be used only for the purpose of project development. And the money from that project, that account can be drawn proportionate to the progress of the project. And after it is certified by the engineer, architect, and most importantly, after getting a certificate from the chartered accountant that this money is required for the project and the progress of the project is commensurate to the drawal of the funds from this account. So that gives a lot of responsibility, it casts a lot of responsibility and accountability on the chartered accountants. Not only with that, in case of the projects which are not completed in time, where the timeline is extended by the RERAs, the Act gives the authority to the RERAs to impose some additional conditions. In Tamil Nadu, last couple of months ago, we have brought a regulation, and as per that, we have introduced that, among other things, 20% additional money in case of the delayed projects where extension is given by the RERA beyond 1 year. In addition to the 70% mandated by the Act, additional 20% have to be deposited in the separate account, in the RERA account. So that means from that date, from the date of extension, 90% of the receivables for a project has to be deposited in that account. And that money to be used only for completion of the project. And that is to be ensured by the chartered accountants. All the RERAs, we are insisting for some kind of financial plan when the application is submitted for the registration of the project. Now that also, this financial plan also has to be certified by the chartered accountants along with the engineer about the financials of the project, what is likely to be the total cost of the project, what is the source of funding, from where this money is coming. So that also casts a lot of responsibility on the chartered accountants. Lot of these legacy projects, most of the delayed projects, they are pre-COVID-19 projects. And many of these projects, they are facing financial problems. So while extending these the timelines for these projects, we also insist the promoters to demonstrate us that how they are going to mobilize the money for the balance work, from where it is coming and how it is going to be supervised. And invariably, we are insisting for a certificate from the chartered accountant about the financials of the project. So that is to be again provided by the chartered accountants. So in nutshell, the Real Estate Regulation and Development Act, a lot of responsibility is given to the chartered accountants. And if the planner, the promoter, the planner, the engineer, architect, and chartered accountants, they are work closely in proper coordination, I'm sure that many of the projects can be completed in time. So I urge all the participants here that the Real Estate Regulation Development Act, it is a very good legislation, and in fact, entire uh, throughout the country, each and everyone is benefited by this act. There used to be large number of complaints. In fact, here also in Tamil Nadu, we have about 900 complaints pending right now. Many of these complaints are pertaining to the pre-RERA era. And after the implementation of the act, the number of complaints have drastically come down. But going forward, if the nuances are properly understood by all the stakeholders, I am sure in the years to come, the number of complaints would further go down, the delay in completion of the projects would be minimized, and the consumer satisfaction would be far, far better. But that is possible when each one of us, all the stakeholders, they perform their responsibilities and duties cast upon them by this act in a proper manner. I congratulate the ICAI for bringing out a very recently you have brought out very good, you have conducted a study and you came out with some recommendations for strengthening of the RERA. That is best practices and recommendations. In fact, I have gone through these recommendations and best practices which you have shared through this. And some 1 month ago, there was a meeting in Ministry of Housing and Urban Affairs. There is this Central Advisory Council's meeting was there. In that, also some of these recommendations, by quoting the source, I had mentioned there that these are very good recommendations, and we should give a serious look to these recommendations. So followed by that meeting, subsequently we had a meeting of some of the chairmen of RERAs along with the Ministry of Housing and Urban Affairs. And we have made certain suggestions about some kind of amendments in the act. And there I have picked up some recommendations from this book. So I congratulate the Committee on Commercial Laws, Economic Advisory and NPO Cooperatives of the ICAI, and congratulate Mr. Abhay Chajed for doing a very good job in this. And I thank Mr. Amit for giving this opportunity. I think Mr. Amit reached out. So thank you, Mr. Amit, for giving me this opportunity. And I also would like to thank the President and Vice President of ICAI for, kind of organizing this event, because RERA is very important. Real estate sector, as you know, that it is the second largest job provider in the country. About 7.5% of the GDP comes from this sector, which is likely to go up to 13% by 2030. And going forward, if the country has to grow, the real estate sector has to grow. And without real estate sector, the growth will not be as we can see the example of Tamil Nadu. In 23-24, the state registered a real growth rate of 11.19%. And in case of real estate, recently there was a study by one leading newspaper that in 7 big metros, overall the growth in the booking of apartments this year as compared to last year was in negative, minus 13%. But in case of Chennai, it was plus 13%. So this, along with the GDP figures, if we see, the Tamil Nadu is doing quite well. And going forward, I'm sure this and that if the economy, real estate sector is doing well, the overall economy is doing well. So that is not true only for Tamil Nadu, but for the entire country and across the state. The cities are considered to be the growth engines of any economy, and I am sure that in the years to come, the real estate sector will do much better, and the chartered accountants, the ICI, will be a stakeholder to that, along with, of course, the RERAs will also play a minor role in this entire journey. So thank you very much for giving me the opportunity, and wish you all the best for having purposeful deliberations over the next 2 hours. and I wish all the participants a very happy Diwali. Thank you.
Uh, Thank you very much, sir, for your words of appreciation. Sir, you are a visionary leader, sir, who have came from another state to Tamil Nadu and was the secretary of the chief secretary of the state and now the chairman of Honorable RERA Tamil Nadu. Sir, 2 years before, in November 23, we around 63 chartered accountants came together in Hyderabad under the leadership of Shri Abhay Chhajerji under this committee. And for 3 days, day and night, we 63 chartered accountants discussed about how what RERA is currently and how it needs to be, how more improvisation could be done and how the strengthening of RERA could be done. Similarly, on 7th November, again there would be 70 chartered accountants who are assembling at Hyderabad. So for 7th, 8th, 9th, they would be there for 3 days, again from across the country, and they would be again discussing what have happened in these 2 years more and the amendments which have been suggested. We would be discussing how those amendments could be more improvised and what could be the more suggestions could be brought to in front of you as the chair of the Tamil Nadu chairman and to the housing so that the act could be strengthened more, sir. So, sir, I would request you also if you can spare some time and be a part of the seventh delegation, sir, which is where UP RERA chairman have confirmed, Punjab chairman sir have confirmed. If we would be obliged, sir, if you can also spare some time for your guidance there, sir.
Certainly, Mr. Amit, I will give a serious look to it. And in fact, this is always mutual for the mutual benefit because any this legislation, a lot of issues are there, and we feel that these need to be addressed. And as I was one of the invitees, being one of the member for the Central Advisory Council of RERA, I attended that meeting, and the Honorable Union Minister was there, and he's very uh, serious about these amendments. So I'm sure the government of India very soon will come out with amendments, and in that process they are in touch with various stakeholders. And as I mentioned earlier, you have done a wonderful job. This is not something like some theoretical study. This is based on the practice you have come out with these recommendations, and maybe going forward you will further refine these recommendations, and it will help in improving this legislation. And overall, this is in the interest of the real estate sector. And any legislation, it is not something like only to protect the interest of the home buyers. It is for the overall to protect the interest of home buyers, promoters, and especially the real estate sector. So I'm sure that there are certain issues with the act. Once that is addressed, it will further improve in that overall development of the sector. So definitely, I will give a serious look to your proposal for this meeting, and maybe I'll also try to be part of that.
Would be obliged, sir. Would be obliged.
Thank you so much, sir,
I
for sharing
request,
your
I will,
insights.
I will,
Moving ahead.
I will drop out. I'll request there is some other engagement I have in the evening. So maybe I'll take your permission to drop out of the meeting.
Sir, thanks for coming and thanks for your kind words, sir. We captured that. Thank you very much.
Moving ahead, I extend a very warm welcome to our esteemed speaker for today, CA Amit Kumar Kedia, sir. Sir is a distinguished chartered accountant having over 17 years of comprehensive experience in finance and consultancy services. His core competencies include regulatory compliances, RERA, SEBI regulations, legal and dispute resolutions, investment vehicles, capital markets, corporate services. As a passionate speaker, Mr. Kedia shares his insights at various industry events, demonstrating his commitment to fostering knowledge within this sector. Sir, I welcome you on behalf of all the participants. Over to you, sir.
Uh, thank you. Uh, Thank you all of you who are present there on the eve of like festival. So we are just about to start our meeting. like each and every one of you are present here for a very important topic. So definitely, it's a audit season under which like we are going through, and with this audit season, RERA being now a very important aspect of the real estate sector. Uh, the understanding about the audit of RERA in aspect of the Real Estate Regulation Act becomes far more important. So moving forward, I would love to say thanks to the committee of the Commercial Laws, Economic Advisory, and NPO Cooperative, our President, our Chairman, Shri Abhay Chhajirji, and our Vice Chairman, Pramod Jainji, for giving this opportunity to me. In addition to the whole Secretariat, whose day and night efforts are being there for any of the program to be made a successful one. So, friends, if we all know real estate is the biggest contributor of the GDP. And moving forward, when we are looking for a Viksit Bharat, then without the development of real estate sector and the infrastructure, achieving Viksit Bharat is next to impossible. And when it is giving a contribution which is the highest post agriculture, the responsibility of the sector becomes more critical. We, being the chartered accountants, if we talk about real estate, the first thing which comes in the mind is finance. And as very rightly said by Chairman Tamil Nadu, diversion of funds, manipulations of fund are the major reason why, because of which the projects which are there gets stalled, the projects fails. These are the reasons behind it. As you very well know, back 2008 there were lot of diversion of funds which happened, and because of those diversion of funds, many of the home buyers were not able to have their dream home, which for which they have given their hard-earned money to then those developers. Because of this whole high cry, the RERA Act 2000 came in place, and the RERA Act, which came in place in 2016, got implemented on the majority of the sections got implemented on 1st May 2017. Now, as told, finance is the most important and the critical aspect. We would try to understand in today's webinar of ours how this certifications, how the controlling is done at from the RERA's Act 2016 end, and we would be taking some odd important case laws which have recently been done. So, friends, Section 4 to LD of RERA Act, which I would going to say is the heart of this act, says that the 70% of the amount which have been raised by any of these real estate projects from the allottee from time to time should be kept in a separate account, and this amount could only be withdrawn with the percentage of work which have been completed. So the percentage of work which have been completed, in proportion to that only there would be allowed with the withdrawals of this fund. Friends, if you have any questions, please feel free to put them, and during the webinar, I would try to take it, and if any of the questions would be left, I would try to take it at the end of the webinar. Our moderator would be facilitating us with the question answers. So friends, this section, that is 4.2 LD, then gives the power to some of the professionals from whom a certificate is required to be taken. Post that certificate, only the withdrawals would be done. In addition, at the end of the financial year, within 6 months, an audit needs to be conducted. With this audit, a report have to be submitted to the authority. Having said that, whatever have been withdrawn, it have been done as per the regulation. One thing I would primarily like to clarify, there is a lot of confusion which happens many times, that is both the chartered accountants needs to be same. Can both the chartered accountants can be separate, or one certificate could be given by one chartered accountant and another by another chartered accountant? So there is bit confusion till date also. Many times this confusion gets erupted after almost 9 years of implementation of this act. So just to give a clarification, before we start, there are majorly two certificates which are given by the chartered accountant. So the first one, that is for the initial withdrawal of the fund, when the certificate would be required, it could be given by any chartered accountant. Yes, it is can be given by any chartered accountant who is having a certificate of practice. This chartered accountant may be taking care of the compliances or not, but he would be eligible for giving the certificate. The second certificate, that is the certificate which is required for the annual compliance. This certificate would be given by a chartered accountant who is a statutory auditor of that entity, of that legal entity. So whoever is the statutory auditor would only be eligible for giving this annual certificate for the purpose of RERA. So hope this thing is absolutely crystal clear with all our professional friends. Now friends, in the act, it has been clearly mentioned that first a certificate would be coming from an architect, then from the engineer, and post the certificate from an architect and engineer is there, the certificate would be given by the chartered accountant on seeing the progress which is there on grounds. So the progress on grounds would be showcased, would be told by the architect and the engineer through their certificates. Post understanding the working on grounds by the architect and the engineer, the chartered accountant would going to do an assessment from the financials which have been provided, and post understanding the work done at grounds and showcased in the financial, he would be issuing the certificate. So this is what is like the broad aspect in regards, broad aspects in regards of understanding these certificates. So, as told, for any withdrawal of 70% on the day-to-day basis, as and when necessary, as and when the quarterly compliance are required, whenever the certificate is required, it would be given by any chartered accountant who is there in practice. And for the annual certificate, it would only be the statutory auditor. So basically, the reason behind the certificate is to safeguard the money which is there of the allottees who have given this money to the developers, so that this money is absolutely being utilized in the project only. This money does not get siphoned off or could be allocated to any other project. A chartered accountant who is having a COP, who is having a lot of responsibility while he is giving these certificates. These certificates are used for any withdrawals. They can be used for any evidences in the court of law. These certificates can be utilized for understanding the accuracy of the financials which have been carried on. So you can understand that how important these certificates become while they are being issued. Now, if we understand at which point of time these certificates would be required. So at any given point of time, I want to do a withdrawal. Then I would be first requiring these certificates. Post having these certificates issued by these professionals, I need to submit these certificates to the banker if the banker do ask. If the banker does not ask, then also I need to maintain a record of these certificates for any future queries of the authority. Now, if we understand that the authority can demand these certificates at any given point of time, so we need to preserve these certificates well before we are there on the bank side for the submission of these certificates. In case throughout the quarter we have not withdrawn any sum, then at the end of the quarter we need to get these certificate issued and needs to submit these certificates to the authorities. So maybe at that time we need to withdraw money, and if that time was not required, that during the quarter their certificates were not required, then at the end of the quarter we need to get it issued from these professionals. Authority can demand these certificates suo motu to understand. At times, it happens that extensions are required by the project, or the project registration is to be changed in terms of change of promoters. At those point of times also, these certificates might be required. So again, the withdrawals needs to be done, or the issuance of the certificates are to be done post issuance. In regards of the annual certificates, these annual certificates are required to be issued after completion of the financial year within 6 months. So the 6 months have been given in the regulations, but many of the state authorities have now changed this 6 months to the 9 months because of the reason that in these 6 months, the audit process, the financial audit keeps on going, the statutory audit keeps on going in regards of the Income Tax Act. And post these audits are being completed, these certificates are issued. So both were going in parallel. The same date was following again and again. So on again 30th of September, it was the last date of filing the income tax audit return. On 30th of September, it was like the filing of the RERA. So because of these parallel, many of the authorities have now changed it from 6 months to 9 months. But as per the regulations, it is 6 months only. These documents could be required to be submitted to the bank, to the authority in a physical mode, or to the authorities through a electronic mode, that is through their portal. Now friends, it is for sure that once a project is completed, there would be a certificate which would be required to be issued. At the time of registration of the project, the authority asks in regards of the estimated cost which is required to be placed, because whenever we see the percentage of work completed, then that percentage of work completed, the base would be taken in regards to the estimated cost which have been given by the promoter at the time of registration of the project. So while understanding the estimated cost maybe of the land or the development, one thing we should always remember, if we have done a good planning, then the outcome would be planned only. And if the planning is not done properly, then in that case, it would not be a proper outcome. So, this needs to be understood and verified well before the time when the project registration is being put in place. So when the project is being put for the registration, we need to understand and see that the estimated cost which has been given is being calculated properly. The BOQ, if calculated properly at the initial stage of the project only, then it will help the promoter to do an assessment in regards of his strengths and weaknesses. At any given point of time, if while calculating these estimated costs, if he thinks that they are short of money or they are excess of money, then they can take an informed call accordingly. So, if we talk about these estimated land costs, what needs to be placed? So, the price which have been given by the land annual statement rate which is there, that could be one of the bases. Then the development rights, like the value of FSAI, any additional FSAI which may be required, any TDR's requirement which may be there, any of the stamp duties or any other levy which could be there for any of these authorities, any land premium which could be there for any rehabilitation. Then in case the rehabilitation cost, the cost of clearing that land, any additional fee which is required for, which is for the ASR linked premium, or any of the cost which is there for the interest or borrowings. Friends, the interest and borrowing cost is normally being left by the developers. They do not even care, they do not even bother of putting this cost, the interest on, maybe on the land, the interest on the construction, and because of that, the viability of the project gets compromised. So the interest is a very important aspect that needs to be accounted for. If we go for the estimated cost of the development, then again that is a very important aspect which in the development of any of the real estate project. So maybe in terms of the construction cost which is required to be placed, any of the cost which is there in regards of site development, any of the overheads which are required, salary, any of the statutory fees, the cost of construction which is required. So they all needs to be verified by an engineer or the competent person before the submission of these estimated costs are being placed to the authority. So if we see, we need to see that these estimates includes the land, the development tax, the borrowing cost, or any of the uh, cost which are created through the working of these architects, engineers, any of the criticalities which are there. We need to understand these budgets far more before only how the financial needs would be fulfilled, how a proper cash management, proper cash flow needs to be seen. These all understandings needs to be put in place well beforehand, so that at the time of creating these estimated cost there is no flaw which is being created, and this always gives a comfort to the developer and to the team of this developer. It would always help in doing a better planning. At the time when these withdrawals are required to be done, then it should be seen that 70% of this amount is only which is being withdrawn, and it should be seen and checked from the certificate of architect and engineer. So the progress which is being reflected from the architect and the engineer certificate, those progress needs to be there in place while these are being put in place. We need to see in regards of the allottees funds. So what are the total value of bookings which has been done? What are the amounts which have been sent? If any of the proceeds are coming from the loan side, that is, the allottees have taken loan, but standing instructions are given to the banks to do the payments, then those needs to be checked. We need to see documents like the invoices, the bank statement, any of the tax receipts, the payment voucher, and the most important, the agreements. So, again, you all might be knowing there is a specific draft of agreement which is there with the act. So, section 13 very specifically says that post receive of 10% of the amount, a developer cannot take more sum of amount before he falls into a registered agreement. So if the developer does not fall in a agreement post taking 10% of the sum, then again this is a statutory compliance which we need to see. As a statutory auditor, if the agreements are not being done, an amount of more than 10% is being taken, then it becomes a gross violation of the act. And for the statutory auditor, we all know like it is not the Income Tax Act or the Companies Act which needs to be reported. If the balance sheet items are being reflected by those all are required to be reported. So again, not only the certificate becomes the duty, not only the balance sheet becomes your duty, but the duties like seeing the agreements also becomes a critical and an important aspect of your audit and part this is a part of the certificate which is being issued by you. In addition, you should see and look that there is no lien on the assets and ensure if there are any, they needs to be reported to the authority. And this amount which is there needs to be kept in a separate account. Tomorrow, the developers say, I can withdraw this amount, keep this amount in a fixed deposit, in a separate fixed deposit. Again, this would not be an acceptable thing. These fixed deposits could only be made if any of the banker allows this facility in the separate account only. It cannot even linked to the separate account. So friends, uh, if any of the certificate which is not again qualifying the regulations, then they need to qualify these certificate. They need to put a note on the certificate mentioning what is being accepted or what is not being accepted, what they have been qualifying for. At the end of the day, we all are professionals and we have our professional responsibility. If we overlook this and at any given point of time, any of the disciplinary action thus creates on us, then we have a say that we have qualified that. But if we have not qualified that, nobody would going to listen us. So we should always take care if anything comes under our notice, then they should be addressed in a proper manner in the certificate itself. So if we see the documents which are essential for the withdrawals or certificate preparation, then any of these financial records that are the books of accounts which are required, the ledgers which are there, we can always take a third party ledger verifications which are uh, there required to be done. The bifurcation of the estimated cost, any of the uh, help of these professionals, the technical professionals, we can say, that is these architects and engineers, that could we can take a help of proofs of payments of tax, maybe the GST, the TDS, which are required, any of the taxes which are being paid, that could help us in formulating these certificates which are to be prepared. Any of the certificates like the no lien certificates could be helpful. Any of the statements which is apart from these bank accounts could also be an important aspect. Having said that, to understand that the amount was collected in these separate accounts only. As told previously, the registered agreement to sell is a very important aspect, very important document which we should always verify while we are doing this responsibility of ours. Understanding the estimated cost, any of the revisions which are required to be done in the estimated cost, that needs to be acknowledged properly and to be seen that these estimated costs which have been changed have a substantial reason why these were required to be change, so that these estimated cost does not misrepresent any of the tax authorities, because now what is happening, the stamp duty, the stamp act is seeing the value of our certificates, the GST authority is seeing our certificates for the basis of their assessments. Income tax authorities are seeing our certificates as the basis for their assessments. Authorities like the labor law, again, for their collection of their labor cess, are seeing our certificates as the base. And over and above, the RERA authorities, for and in regards of the completion of the project, the time period which the project was allowed, the time period for which the money have been collected and the money have been withdrawn. So you can understand the importance of the certificate of ours. Today, the contribution is 7% of the real estate in the GDP, and this contribution is set to increase to an extent of 15%. So you can understand how important our certificates are becoming day by day, how important the economy is dependent on our certificates. If these certificates are not issued by a proper assessment, by a proper calculation, they can lead to a stalled project in future. They can lead to a bankruptcy of a developer because they have not withdrawn or they have not came up with their corrected estimated cost, or like they while they were working they were not able to present themselves properly. So you can understand how important these certificates of our becomes. Definitely, there are challenges which are attached to it while we are preparing these certificates. The ownership structure of any of the development is at times very complicated. Tracking the real time material which is being coming and which is being applied at times becomes very tricky. Might be the financials are speaking something else, and the progress of work there on ground says something else, because the site is at any different place, and the office where these books of accounts are maintained are at different place. There might be a communication gap where like a proper information is not being transferred, entrification or wrong capturing of documents might happen. So we have to be vigilant. We have to understand and set our SOPs while we are operating and working on these responsibilities of. If we see while we are conducting our audit, then we need to see how these audit reports would be concluded. We need to see what is the scope which is covered under the designated account of the RERA, how the expenditures are being incurred, what are the loans which are there, what are the compliance which are required to be done. Reconciliation would always be required. There needs to be a review of any of the changes which are to be there. Always, as I told you, now other authorities are seeing these certificates as a base. So we need to reconcile these certificates from the other compliances like the compliances of GST, income tax, or maybe the company's law, or maybe any of the local law like the labor law. We need to see that these statutory compliances are also being done parallelly, and there is no violation or no discrepancies between the certificates and the compliances which are required to be placed. If we see the documents were like required for the annual audit, then again we all have a fair idea like the bank statement, the reconciliation report, the invoice, the contracts, the payment voucher, any of these certificates which have been issued by these chartered account by the architect and the engineers, and the certificates which were issued previously by the chartered accountants who have given this certificate at the time of withdrawal of these funds are required for these annual audit. Any of like the documents which were there for the withdrawal for the loans which have been given would also be one of an important aspect while the audit is being conducted. There are some uh, common challenges in regards, and there are some best practices while we conduct these audits. So some of these challenges could be the developer is having multiple of accounts. So at times it becomes very difficult to track them. At many times, it has been suggested and told to the developers that you should always take the amounts in the RERA designated account only. But then also, they take amount in non-RERA account also, which becomes a challenge for an auditor to identify and to take the account for. One another very important challenge which becomes is a single developer have multiple projects, and in those projects at times he puts the amount of a X project to the Y project. So this uh, uh, attempt of putting a money from one project or in another project, that becomes in a very difficult job for an auditor to do an assessment of while they are conducting their audits. As told previously, the work is being done at site, the payments or the accounts are being conducted or managed at the office level without approvals. At times, the expenditure gets incurred, and again, because of this, it becomes again very critical while doing an assessment that there is no approval and a cost have been incurred. But to overcome all these challenges, some of the best practices which could be created, maybe creating a documents, a list where it has been mentioned properly that what are the documents which are required, how, what could be the SOP which needs to be there, a proper planning could be put in place with all the verification, maybe a physical verification or verification through a financial record, which would be helping in proper management and communication. So the underlining is that the communication should be very strong, and with this communication, there needs to be a transparency which is required to be put in place. And if any irregularities are there, then they needs to be addressed accordingly. At the team level, education which is to be required to be given, that in regards of any of the RERA account which is to be maintained or the tax regulations which are to be followed, that could help in carrying on and maintaining the best practice in the system. If we see that there are documents which are having a deviation because there are the figures which are being given by one professional is independent, and another can influence the independency. We have to see that there needs to be a independency of both these auditors. The auditors who is giving these certificates at, at the time of withdrawal, and the auditor who is doing the auditor. So there needs to be an independence which needs to be there in regards of any of the uh, amendments which are required. Then there needs to be a proper evidences which are required to be there. If any of the evidence is to be amended, if any evidences are to be amended, then proper evidence of the same needs to be required to be placed. It was said in the opening remarks by our honorable speaker that our chairman uh, that there are a lot of disciplinary actions which are happening. Lot of uh, 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 you can say actions which have been taken on the professionals also. So we need to see that the certificates which are being uh, uh, given are given in a legitimate manner. Many of the RERA authorities have taken action and even reported to the institute also because of the representation of the certificates given by some of our fellow chartered accountants. So there is undoubtedly risk. The risk could be to an extent of suspension of the certificate of practice. So it needs to be taken due care that these certificates are issued in a proper manner. Penalties could be imposed on the promoters, on the professionals. Uh, so it can damage our reputation. So these all we should keep in mind before we are issuing any of these certificates. We have to maintain these separate accounts. If we understand these structures which are required, then we should always see that a group might be having multiple entities, or multiple entities, or each entities can have multiple projects, or each project might have multiple phases or multiple towers, or every registered project might be having, should have a separate account. So if we see a group which is again having multiple entities, these multiple entities would be having multiple projects. These multiple projects can have multiple registration because every single phase is a independent separate project, and these separate projects needs to have their independent, that is a separate bank account. Now if we see, these accounts needs to be opened separately, that is every phase would be having a separate account. So you can understand how important it becomes while any of these accounts are being opened, any of these guidance which are being given to the promoter while these accounts are to be operated. So that is a very important aspect in regards of the uh, architect, in regards of the engineer. Each and every account needs to be dealt independently. So this is bit complex version, but yes, in the real time, it is required to be understood that these complex structure are there, and we need to create our SOPs in such a manner that there is no siphoning, or maybe unintentionally, maybe like the promoter is not willing that his one account money goes to another, but because of these complication, it at times it happen. Any of the borrowings which are apart from the project, that is if the amount is not from the original project, that amount should always be kept in the 30% account, which is separate from the 70% account. If any of the promoter are putting their own contribution, then also these amount should be kept separate from the amount which have been collected from the allottee. So these are like small things, but at the initial stage, if it is not been addressed, then it can become a very complicated situations. Now, if we understand, we have understood at what time, at the initial, what time the certificates were required by us. Now, if we understand by what time, that means when the certificate would not be required, or what would be the end of this whole process of taking of the certificate. So the end of taking of this certificate is at the time when a project is completed. We would understand like the project which is completed at a in our next slide. But once the project is completed, then it does not require the certificate. So if we see, the first certificate is required when the first quarter is filed. The last certificate for the quarter is required when the project is completed for that particular quarter. In many authorities, a subsequent quarter is also filed post completion of the project. Then, in that case, that quarter would be counted. For the annual certificate, it would be the first certificate that would be required in the financial year in which the project got started. So, for example, if the project got started on January 2020, then the first certificate which would be required to be filed for an annual one would be 31st March 2020. And for example, this project gets completed in April 2025. Then, in that case, the last certificate, the annual last certificate, would be March 2026. So, this is how these certificates would be required. It would be directly correlated with the completion of the project. Moving forward, if we see if there is any change of bank account, then also these certificates would be required. And for the final withdrawal, that is the amount which is like there left over, which might not be clearing the eligibility. That amount could be withdrawn post the completion certificate have been issued. So the whole amount could be withdrawn post like the completion certificate have been received. Now, if we see what is completion, then the completion for the internal development work would be the completion of the road, drainage system, the park, trees, streets, lights, any of the social infrastructure, any of the waste energy management, water conversation, that the health centers, that would be the areas where in regards of the internal development which needs to be seen while we understand the completion of a project. In regards of the external development work, the roads, the sewerage, electricity transformer, solid waste management, these are the typical external development which we need to see. What are the obligation of a promoter? So a promoter needs not to only take the completion certificate, but even he needs to take the occupancy certificate. He, in addition, needs to create the association of allottees. In addition, he needs to transfer the amount which is unspent or which has been collected as a deposit from these allottees to these association, or any of the statutory dues which is there that needs to be paid uh, and if the documents are there which are not being handed over to the association, then the handing over of the documentation needs to be there along with the common area which is required to be put in place, to be given, to be transferred to the association. In addition, there are separate state rules also which needs to be seen in regards of the completion, in regards of creation of the uh, uh, in regards of creation of the society that needs to be taken care, that needs to be understood. So once this whole activity is being done, a completion certificate is being issued by the competent authority. In some of the authorities, a empaneled architect has also been given power under the state legislatures where an architect can also issue a completion certificate. So post these completion certificate, the responsibility of the developers get over. Formally, the projects Formally, the projects get over and the entire amount could be withdrawn from the designated account, and there where the responsibility gets over. So, if we see what are the takeaways of understanding these guidelines of section 42LD of RERA, the section, as I told, is just 5 to 6 lines subsection, but it is the heart, it is the core heart of the act. You can say it is having the fullest control of the whole development which is being carried by the developer, and so do it is having the responsibility of we as chartered accountants for creating, for issuing a proper certificate so that all the stakeholders, maybe the government authority, maybe stakeholders, which is the most important, the allottees, and the regulatory authorities, the respective RERA authority. We all are addressing to all of them with a single certificate of ours. Over and above the investors who are there in the project, like the banker who is giving loan, the institutional investors which are there. If the entity is listed, then the shareholders of that entity. So you can understand a certificate of a project becomes so important for this whole ecosystem. So what we need to maintain, we need to do a proper due diligence, we need to have independence, and we need to evaluate very critically on each and every aspect. We need to be highly vigilant. So you can understand the importance why we all needs to see this certificate and the importance of this certificate. The financial records, any of the technical certificate which are issued needs to be filed in a regular manner and needs to be preserved and kept in a proper manner. Needs to understand in regards of the estimated cost, needs to understand the pre-registration stages which is there, any of the fund flow planning which is required to be done, timely putting the documentation, that would going to create a clear communication between the promoter, allottees, and the regulator. Because of this transparency, there would be no misunderstanding between these stakeholders, and there needs to be a proper formats in which they needs to be presented and in a timely manner, which needs to be seen that it is being provided in a timely manner. I have tried to capture a overview of these and tried to showcase the importance of these certificates. Then also there are separate RERA authorities who have given separate and a detailed guideline for maintaining and operating these separate accounts. So we need to see and check them also if we are dealing in a specific state, because every state is having a separate regulation, and under those regulations they have made some changes, but the overall scenario remains the same. So as we have seen, Tamil Nadu have changed from 70 to 90% of those categories of project which are stalled, which are not in a good shape. So we as chartered accountants are the gatekeepers, gatekeepers of not only the project, not only of the regulator, but of the country as whole. And we need to see that our accountability, the transparency which is required, we should maintain so that the project is completed well on time, and there are the harder money of the allottees, and that is secured. The promoters are on the right track, and we help our country in the development which we are looking forward to become a developed country by 2047. So with this, like we have completed our certification. If there are any questions, I would request our moderator that they can take the questions on the certification. Then post that we can start with our judgments. So I have tried to capture some of the important judgments, some six odd judgments, six, seven odd judgments, which we can take. Post, like if there are any question, I can address them first.
Um, Sir, I'll read the questions for you.
Yeah, please.
Yeah. Sir, the first question is, sir, you mentioned that the amount can be withdrawn only once the withdrawal certificate has been obtained, and these are quarterly certificates. So, what about withdrawals required in between the quarters?
No, I just clarify once again. If I need at any given point of time, I can withdraw, I can approach my architect, engineer, and the chartered accountant and request them to issue a certificate. I can do this process multiple times, but if they have given an eligibility to me and that eligibility is not achieved, or you can say not been uh, oversighted or not been crossed, then the same certificate of mine could be utilized till the time I approach that limit. If at any given point of time between the between a quarter only I utilize this limit, I can go to these professionals and get the certificate issued again. That is one thing. Then the first deadline comes, that is the end of the quarter. So, for example, quarter ending September, I got the certificate issued on 29th of September. Then post that I did not went to any further more certificate to be issued. Then at that point of time, that certificate could be used for filing of my quarterly compliance. Or you can say, during this September quarter, I have requested for four certificates. Then the last certificate which have been taken from these professionals could be used for filing of my quarterly compliance. In case during the whole quarter I have taken no certificate, then in that case, on 30th of September, I would be requesting these professionals to issue a certificate to me. The mere purpose of this certificate would then be for compliance purposes. Again, the eligibility which is being reflected in this certificate at the end of this quarter date, 30th September, if in October I am required to withdraw and my eligibility is with me, then I need not to take further certificate till 31st of December. Hope I the answer is clear.
So the next question is, sir, registered agreement is to be referred to identify the project for which allotee has paid the amount. I think an
Sorry,
important aspect.
your voice was not clear. Can you come please
Oh,
again?
I'm repeating, sir. Sir, registered agreement is to be referred to identify the project for which allotee has paid the amount. I think an important aspect would be to also under the IFC environment maintained by the promoter. Also, I think one needs to see the receipt side to ensure 70% is being collected to separate account and also the withdrawal side. Here is the CA under obligation to verify if the withdrawals done from a separate account in past was used for the given project.
Yes, definitely. First and foremost, in regards of the agreement, we need to see that if 10% of the amount is being collected, then first the promoter falls into an agreement and then only takes further amount. This is a diligence which as an auditor we always need to keep on. In regards of the withdrawal, definitely, like the documents as told, the bank statement, other proofs that would be required to substantiate that the withdrawals which have been done are correct or not. That the certificate issued by an architect engineer, does that showcase the progress which is being reflected in these certificates. Over and above, if a chartered accountant wants to go for a physical verification at the site, seeing the basis of the certificates issued by the architect and engineer, and then cross checking with the financial, he can always do that. There is no harm in that. It's like along with a certificate, you are going for a physical verification of the certificate for which you have seen the financials, you have seen the progress in papers, you are just going and seeing the progress at the site itself.
So the next question is, the requirement of keeping 70% amount in separate account is for each real estate project. So what is the definition of a project? Is it to be taken car-wise or site-wise or basis RERA registration-wise?
It would be on the RERA registration wise. So, as told previously, uh, I just come with an example. There is a ABC Limited. ABC Limited is having four entities. So now I am leaving the three entities. I am just concentrating on the entity one. In the entity one, we take an example that there are two projects. Each project is having 5 towers. So we leave project 1B. We now concentrate on project 1A. In this project 1A, the promoter thinks that I go and register 3 towers at the time and 2 towers at a later stage. So these 3 towers would constitute to be a project for that promoter. And this whole activity of opening the account, getting the project registered, getting the completion would be for this 3 tower. So a very simple definition of RERA says every project which has been registered is a separate project. So if any project is completed in phased manner, then that phase would also be tantamount to be a project. In our example of 1A, where there were 5 towers, we have distributed this project into 2 phases. So these phases are 2 different projects. So all the compliances which are required to be done would be for these 2 phases.
So there is, I'm a newly qualified CA in practice. I intend to take up RERA certification and audit work of real estate companies, firms. As a proprietorship, how can I approach and seek new assignments? Also, if any registration can be done to get such work assignments, especially in Haryana, Delhi, UP, Punjab, and Uttarakhand.
So basically, there is no registration which is required. The biggest registration which we are having is the COP and our membership number of the Institute of Chartered Accountants. Moving forward, as we are qualified, we can showcase our knowledge to the fraternity of developers and can discuss and meet them, showcasing like this is what knowledge I am having, and this is how we would be giving you the services. So that would be the base from where you need to kickstart with your practice. Our institute is conducting many webinars, many seminars. Next month also there is a 3 days program which the Institute of Chartered Accountants are conducting specifically on RERA, that is like 3 days residential program. So these all you need to attend, understand. You need to have a more command on the subject, and then your command would be reflected in front of the service takers who you want to give service to.
So the next question is, I would like your advice. My flat in Kerala, 3 BHK flat purchased while I was in Qatar from developer A. Total cost, including statutory dues and stamp duty paid, 43 lakhs INR. Flat handed over with ease in 2014. Since then, despite several reminders and pleadings, registration of my flat has not been done. Only false assurances and promises from their office. Filed a civil case in Alankulam Court for registration of my flat. My query: it seems RERA Act is not applicable in my case since my flat was handed over in 2014. As there is enormous delay in registering my flat, are there any grounds, provisions that are available in RERA Act that can be invoked to have my flat registered? I am unable to sell the flat due to non-registration by the developer. If it is not possible, this is the question, sir.
So basically, you are assuming that your project was not following in the RERA. It might be a possibility the way the conduct is being shown in your question of the developer. It may be a possibility that the project have not taken the completion certificate. So any of the project on 1st May 2017, if the project have not completed in form of taking a completion certificate, that project would be considered as an ongoing project. So on all ongoing project would be following in the RERA. So you need to first and formally check, does that project have a completion certificate? If that project is not having a completion certificate, you can file a complaint against that project, and then RERA would going to take a corrective measure to do the needful. In case you find the project have a completion certificate, then in that case, as told by you, 2014, the RERA Act got applicable on 1st May 2017. So your project would definitely not fall under RERA, and you have to continue with your civil litigation, which is ongoing.
These are linked questions by a same professional. Is there any specific format prescribed for issuing certificate for withdrawal?
So every authority, every state authority, that is the RERA authority, have issued their formats. More or less, they are similar. So, as told, like there are some guidelines which have been showcased, which have been put in place in respect to the Act. The Act says some of the guidelines. The detailing of those guidelines are being put in place in the regulation. So every authority is having their formats, in addition to detailed guidelines also, how they need to how a chartered accountant, architect, and engineer needs to issue these certificates.
So the next question is, can a CA also offer service of obtaining data registration for the project?
Yes, definitely. It's a basically it's a backbone of real estate. RERA is a backbone of real estate, and a chartered accountant, starting from registration to the compliance to the litigation. Section 56 of the Act allows a chartered accountant also uh, to represent his client and for in front of the RERA authority, the adjudicating officer, and the tribunal. So there is a huge scope of RERA. Having said that, it's a backbone of real estate, and real estate is the biggest contributor after agriculture to the GDP of the country.
Can we also add some percentage as contingency and also for inflation while calculating estimated cost?
Yes, we should. We should, because those contingency will always be there. Might be the Ukraine war, which have created a contingency on the escalation of cost, or maybe like coming up of tariffs to the country. These contingency would always remain. Fluctuation of interest rates. These all would always remain. So we should definitely put in our planning contingencies also.
So the next question is, requirement of 70% to be received in separate RERA account. Does this mean that balance 30% can be taken in different account and used without any accountability slash responsibility to set the fund for that project only?
So thank you for asking this question. It's a very important and a good question. Basically, 30%, there is, if you say there is no responsibility, there is no accountability, is not at all like that. Definitely, 100% of the amount would be coming to a single account. Then that account, the amount would be distributed in 70/30. 70% we have understood the certificates are required to be placed, and then also only the withdrawals could be happening. In regards of the 30% account, the amount is free for the developers. There is no as such direct compliance which is required, but a reasonably understanding is required that this amount needs to be deployed in the project itself, maybe for the marketing, maybe for the other expenditure. For every expenditure, the promoter cannot run and go and say that I want a certificate. So you can say it's a free hand money which have been given to the developer. But this free hand does not mean that 100% of this 30% is being siphoned off from the project.
So the next question is there any
I
guidelines
think
from
uh, uh, I can take these judgments, else I think we would be missing them. So, how many questions are pending?
uh, these are linked questions from a single professor. There are seven more questions, sir.
So we need to decide either we take these cases or we take the questions. I think we take these cases
Yes, we can take
or
these cases because these are all the latest judgments, so this would be helpful.
yeah, that would be, I think, so helpful. That would going to give a sense, and like if post this, we're going to take the questions, and if then also any questions are remaining, then like you can mail to the committee and would be seeing that the questions are being answered. So I just quickly, like in another 10-15 minutes, I just try to sum up these cases. So again, friends, as told, like we as chartered accountants are eligible for we as chartered accountants are eligible for the litigations to be handled by us in regards of our clients. So uh, this is like a case which was decided by the Supreme Court, in which one of these home buyers has filed a complaint before the Maharera, taking a possession of his flat. Subsequently, what happened? This case of there got dismissed, saying that they were delayed in filing the complaint with the authority. Now, the beauty what happened was, on the same grounds, the tribunal also dismissed the complaint, and when the matter went to the High Court, then the High Court, rather than taking the cognizance of this delay and talking about like what have been decided at the lower court and the tribunal, they were talking absolutely different in regards of the content of the case, that is the merit of the case. And finally, when the High Court decided with their wrong merits, the matter went to the Supreme Court, and the Supreme Court then restored this appeal, saying that the condolence which on because of which these authorities, the lower authority, the tribunal, which was dismissing these cases, was not at all correct. They needs to go in the merits before they deliver any order of that, and that is a injustice which was done by these authorities at the lower level. So the conclusion of the act, the this particular case happened to be that just mere delay of any submission cannot restrict any of uh, the party from the justice which needs to be put in place. There is a very good case, or rather, we can say a very interesting case of the Uttar Pradesh RERA authority and Lazan Tubro. Here, what happened? The L&T had applied for the RERA registration, and there is a provision in the act that if within 30 days the registration is not been received, it is deemed to be a registered project. And on that basis, L&T started marketing and started selling their project. RERA authority then put them in radar and saying that this project was not registered and they have done a gross violation of not getting the project registered. So the matter went to the Supreme Court, having said that it is not the only responsibility of the developer. It is the responsibility of the authority also, which needs to see and showcase that they, at a timely manner, should had either given the registration or should have objected the application, but just keeping an application with them and not reacting to that application does not tantamount that the developer is at a violation. Friends, it is said that the RERA Act is always for the allottees and to preserve the rights of the allottees, but see, the act is for the development of the real estate sector. So, if any wrong deed have been done by the RERA authority, then also the cognizance have been taken by the Supreme Court of India. It's a very good case of Karnataka Real Estate Regulatory Authority, where the allottee had approach to the authority and his application was rejected by the registry itself, and saying that uh, this complaint which have been filed by this Amit Gar is not maintainable, and the registry itself cancelled it. Then the matter went to the higher authorities, and there where it was decided that the registry itself does not have any jurisdiction power. So it cannot take a call that would the complaint is maintainable or not maintainable. They needs to go through a legal process, and post going through the legal process only it would be decided that it would be maintainable or not maintainable. So the decision was then came in favor of the allottee, where it came that the registry which have rejected the on the email itself, that complaint needs to be restored, and a proper safeguard and needs to be taken by these authorities. Then a very important case was there where, like, the allottee had given a sum of money, and with that sum of money, he was claiming that I would be taking interest on the whole amount of what I have been paid, what was like committed. But then the authority have taken a view that it's not correct view. The amount which was paid by the allottee, that would be the only amount on which the interest would have to be paid to these allottees. So again, see the protection, how the authority have protected the developer, wherein if the amount is not be paid, then there would no claim of refund on the whole amount. It would be to that amount only where the amount was paid, to that extent only. Again, it's a very good, important case where it was decided that any of the speculative investors would not be allowed to be treated as a home buyer. So what was happening post 2017 and pre 2017, that the investors community used to come and tell that, see, we are there, and you we have invested in the asset, and now we are the allottees, and now all the rights of an allottee would be enjoyed by us. But with this decision of Supreme Court, they have tried to segregate who are the real home buyers, who are the speculative buyers. And if these speculative buyers are going under the insolvency law, then they would not be considered as the home buyers, and the rights would not be given to them. So this had made, like, again, the life of the developers easy, where they have just the investor have just came and done an investment, and he was claiming to be an allottee and was trying to be taking all the rights of an allottee. But the Supreme Court have decided that the genuine home buyer would only be getting this right, and there needs to be systematic reform which needs to be coming in place. So these were like some of the cases. We can like take our questions, whichever is being left. If you have any questions which are unanswered.
So there is a question. Reference to the loan proceeds is to which loan proceeds? Verify that allottees funds and loan proceeds are used exclusively for that project.
So if the allottees have taken loan, then that amount would be coming in the separate account only. If the developer have taken loan, there are some guidelines which are there with the authorities, where they have mentioned that that loan amount would also be coming in that 70 account, but more oftenly that amount could be taken in the 30% account. So it is depending on the authority to authority, and accordingly it has been taken care.
In case completion percent, as mentioned in the architect and engineer certificate, is not in line with what CA find upon physical verification, can withdrawal certificate be issued with a different completion percentage?
Sorry, I just
I'll
got
repeat the
yeah,
question, sir.
yeah.
Yeah. In case completion percentage, as mentioned in architect and engineer certificate, is not in line with what CA find upon physical verification of the site, can withdrawal certificate be issued with a different completion percentage?
Definitely that could be done, and majorly this percentage would be depending on uh, the financials which needs to be supported with. So there are three things effectively which needs to be considered: the architect engineer certificate, the financials which are being supporting towards it, and the physical verification if they deems to verify with. So these three needs to be there in place, and whichever is lower, that could be the sum of amount for which the certificate could be issued to, and that is what is being provided in the regulation, in the act also, like the certificate given by a chartered accountant or an architect, whichever is lower, that would be the eligible amount for the withdrawals.
The another question is 30% contribution from allottees plus own contribution of the promoter and any loan proceeds should be kept in 30% account.
So 30% would be kept in 30%, promoters contribution in 30%, any loan taken on a personal capacity by the the developer in 30%. If loan taken on the mortgage of the project, then 70%.
The quarterly certificate has to be for the quarter end date. And suppose the last certificate obtained for a quarter is not of the last date of the quarter, so then two same certificate will serve the purpose.
As I told, like I have taken a certificate on 28th of September. Post I have not taken, then 28th September certificate would work for my 30th September filing, because that was the stage when I have taken the certificate, and that was at the time of the quarter only, that particular quarter only.
This is a mention or is this a question? I'll request the member to post completely. Are there decided cases RERA applies to grievances raised on projects completed before RERA Act?
Sorry, you need to come again.
Are there decided cases RERA applies to grievances raised on projects completed before RERA Act?
So there are cases in regards of this. Yeah, there are.
This was the last question. Any member have any question, may please post. That's all, sir. These were the
Yeah.
questions.
Thank
Thank you
you.
so
Thank
much.
you
It was
very
such
much.
an engaging session and such a knowledgeable insight into the Act. Thank you so much, sir, for your valuable insights. I also thank the committee on behalf of all the valued participants for organizing such a valuable event, this Knowledge Express week of 5 days. Uh, Completely, there were certain dimensions that were every member wanted to have in this professional grounds. So I thank on behalf of all the members also to the committee for organizing always such delightful sessions for the members. Thank you so much, sir.